history's clear. Every bull run ends the same way. Maximum euphoria, insane price targets, and then the rug gets pulled. And if you're not paying attention, you're gonna be the exit liquidity. So are we nearing the peak of the cycle? Or is there still room for Bitcoin to run to 200,000 or maybe even beyond? The answer isn't based on opinion. It's based on cold, hard data. The same data that's helped investors ride every major Bitcoin boom and sidestep brutal crashes. And today, I'm breaking down the 5 most important indicators that has signaled every major market top before it happens. And indicator number 5, if history repeats, could give us the final price target for where Bitcoin tops out in this cycle. Let's start with the first key indicator. All right. So this is probably the most reliable indicator in Bitcoin's history. We call it the MV-RV-Z score. Now, if you could only watch one metric to identify when Bitcoin is overheated or if it's undervalued, this would probably be one of the ones at the top of the list. All right. The MV-RV-Z score, it looks at Bitcoin's fair value versus the market price. So it helps us separate the hype from reality. It does this by using 3 key metrics. The first one is market value, and this is the black line on the chart. And this is just Bitcoin's total market cap. This is the current price multiplied by the total supply. All right. The second one, the blue line, is the realized value. So instead of looking at the price today, realized value calculates the average price of every Bitcoin at the last time it moved on the blockchain. Now, this smooths out the short-term hype, and it shows us where Bitcoin's long-term fair value is. And then finally, the orange line is the Z-score. And this is where the magic happens, right? The Z-score measures how extreme the gap is between the market value and the realized value. It helps us identify the tops and the bottoms with incredible accuracy. So here's why this indicator is so powerful. Historically, every time the Z-score, the orange line, every time it enters the red zone, Bitcoin's in a mania phase and it's close to topping out. And every time it drops into the green zone, Bitcoin's at a massive discount. And here's the crazy part. It's predicted every single major Bitcoin top within about 2 weeks before the peak. I mean, that's a pretty good track record. Is one worth paying attention to. So what does the MV-RV-Z score say today? Well, right now, we're trending upwards, but we're still well below the extreme red zone. And so this tells us that Bitcoin isn't in a full-blown euphoria yet. But we need to watch closely because the moment we get into the red band, history tells us the risk of a market peak goes way up. So here's how I personally use this.
History has shown that major market tops follow a familiar pattern, but only those paying attention can recognize the warning signs before it's too late. Mark Moss, a seasoned investor, venture capitalist, and author, has spent years studying Bitcoin's cycles, identifying the key indicators that have consistently signaled market tops before they happen. These indicators have proven their accuracy time and time again, helping investors navigate both massive gains and brutal crashes. Now, those same signals are flashing once again, but this time, they're revealing something we haven't seen in previous cycles. With Bitcoin's recent performance, the big question is whether there's still room to climb or if we're closing in on the peak. In this video, Mark breaks down 5 key indicators that could reveal what's coming next. Stay with us until the end, as one of these signals might even hold the answer to Bitcoin's final price target this cycle. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
Gets near the red zone, I start watching all the other indicators more closely. Like I said, this may be one of the most important, not the, but one of the most important, but you need to look at a bunch of indicators, so I start looking at them more closely. This is just one of 5 key indicators that we're tracking to pinpoint when this cycle might top out. So let's move on to indicator number 2, which is net unrealized profit loss, or NUPL. Now, if you want to know how Bitcoin investors really feel about the market, forget the headlines. All right, this chart tells you everything you need to know. It tracks raw investor sentiment, and it's based on how much profit or loss Bitcoin holders are sitting on at any given moment. And here's the best part. It's nailed the absolute peaks of Bitcoin's biggest bull runs every single cycle. Okay, so how does it work? Well, the NUPL stands for net unrealized profit loss. So it's a way of measuring how much paper profit or losses the investors are sitting on compared to Bitcoin's total market cap. So essentially, are people holding massive gains or are they underwater? And it's calculated using two key values. There's the market value, that's the black line of the chart, and this is Bitcoin's total market cap. It's the current price times the total supply. And then the realized value. So instead of today's price, it's the realized value tracks the price of each Bitcoin at the last time it was moved. Now this tells us what investors actually paid for their Bitcoin. Now when we subtract the realized value from the market value, we get the unrealized profit or loss, which is basically how much money Bitcoin holders would make or lose if they sold everything today. So how do we use the NUPL to identify market tops and bottoms? Well, the real magic of this indicator is that it maps out investors' psychology throughout an entire market cycle. And that's where these color-coded zones come in. The green zone shows capitulation if it's below 0%. This is where Bitcoin is deeply undervalued. Now, most investors are holding losses at this point. Fear is at its peak, and historically, buying here has produced the highest returns. Buy when others are fearful. The orange zones is like hope or better. It's usually 25 to 50%. And this is the transition phase. This is where investors are moving from fear and starting to go into optimism. And this is often when we see the early stages of the bull market starting to form. Now, the red zone is euphoria. That's greed. It's about 75%, and this is the danger zone. When NUPL enters this red band, it means most Bitcoin holders are sitting on massive unrealized gains, and when everyone is in profit, who's left to buy, right? So we want to buy when others are fearful, and we want to sell when others are greedy. So where are we today? Well, right now, NUPL is rising, but it's still below the critical red zone. So this suggests that Bitcoin has some momentum. We're on the upward trend, but we're not anywhere near a full-blown euphoria just yet. However, the moment we start creeping into that red zone is when we start to get a little bit cautious, because every single time it signaled a major market peak. So here's how I use NUPL. If we're in the green zone, I'm continuing to buy aggressively on a regular basis. If we're in the yellow or the orange zone, I'm still adding. Maybe I might add a little bit slower than normal. If we enter the red zone, then I'm really starting to look at all the other indicators to see if we're getting close to the top. All right, indicator number 3 is the Pi Cycle Top Indicator. Here's how the Pi Cycle works. The indicator is based on two key moving averages. The 111-day moving average, which is the orange line on the chart, and this follows Bitcoin's short-term price trend. When Bitcoin's price is skyrocketing, this line moves up quickly. And then there's the 350-day moving average times 2. That's the green line. Now, instead of just the regular 350-day moving average, this takes that value and doubles it. It smooths out longer-term trends and gives us a clear benchmark for when Bitcoin is running too hot. Now, the key signal is when these two lines cross. So here's the crazy part. Every time the 111 DMA, the orange line, crosses above the 350 DMA times 2, the green, it's lined up with Bitcoin's cycle top almost perfectly. In all three major cycles, the Pi Cycle Top indicator flashed within just a few days of Bitcoin's all-time high. I mean, that's a pretty insane track record, especially for a tool that doesn't really rely on any sentiment. It doesn't rely on any on-chain data, macro trends, just simple price action. Okay, so where are we now? So what is this indicator telling us? Well, as of today, well, the 111 DMA is climbing, but hasn't yet crossed the 350 DMA times 2. So this means that we're still in a bear market, right? But if we start approaching the crossover, that's going to be our first major warning sign that Bitcoin's rally might be nearing exhaustion. Now, these are moving targets. It's not like it's just starting to near it, because both of them are moving at the same time. So just understand that. But even if it does cross, it doesn't mean we crash immediately. But in the past couple cycles, it meant we were within weeks of the top. Okay, so how do I personally use this? Simple. Same as the other ones. Once it starts kind of flashing top signs, then I want to start looking at the other indicators. There's another 10 or 15 that I think are really important, and I'll start looking at those, and I might start to slow down some of my buying. Now, again, I want to make this super clear. Just because something worked in the past doesn't guarantee it's going to be perfect forever, all right? We have a completely different market today. We have Bitcoin ETFs. We have institutional money. They've all started entering the space, and we could see a completely different cycle dynamic. But until it stops working, This is one of the simplest, most accurate ways that we can detect when Bitcoin is overheated.
To summarize what Mark Moss is saying, two of the most important indicators for identifying Bitcoin's market tops and bottoms are the MVRV Z-score and net unrealized profit loss. The MVRV Z-score helps determine whether Bitcoin is overheated or undervalued by comparing its fair value to its market price. It relies on three key metrics: market value, realized value, and the Z-score, which measures the gap between the two. Historically, when the Z-score enters the red zone, Bitcoin is in a mania phase and close to topping out, while dips into the green zone signal major buying opportunities. This indicator has accurately predicted every major Bitcoin top within about 2 weeks before the peak. Currently, it is trending upward but remains below the red zone, meaning Bitcoin isn't in full-blown euphoria yet, but it's something to watch closely. Another key metric is net unrealized profit loss, which tracks investor sentiment based on unrealized gains and losses. It maps out market psychology through different phases: capitulation, hope, and euphoria. When NUPL enters the red zone, it means most Bitcoin holders are sitting on large profits, leaving few new buyers to push prices higher. Right now, NUPL is rising but has not yet reached the critical red zone. This suggests Bitcoin is gaining momentum but hasn't hit the extreme greed levels that typically signal a major top. However, if NUPL continues climbing into the red, it could indicate that Bitcoin's bull run is approaching its peak. Now, here are more clips of Mark Moss as he continues his discussion.
Heating. All right, now indicator number 4, this is the Puel method. Now we've talked about investor behavior, we've talked about realized profits, we've talked about price cycles, but what about the one group that has to sell no matter what? I'm talking about Bitcoin miners. Now most miners don't have the luxury of just holding forever, right? They have massive fixed costs. They have to pay for electricity, hardware, operators, and that means they're always selling some of their Bitcoin to stay in business. Now, some of this has changed over the years as we've seen more publicly traded miners coming into the space, and they've started to accumulate more Bitcoin on their balance sheets. So this indicator may not be quite as strong as it used to be, but it's still in the top 5. All right, so let's dig into this Puel method indicator, and basically it tracks miner revenue relative to historical norms. And like I said, it's been one of the best metrics for spotting when Bitcoin is overbought or underpriced. So here's exactly how it works. The Puel method measures how much Bitcoin miners are earning today compared to the average earnings over the past year. And it's calculated like this: daily issuance value, which is the newly mined Bitcoin in US dollar terms. Every day, new Bitcoin is mined, and it enters the market. So the metric looks at how much that new supply is worth in dollar terms. 365-day moving average of the issuance value. So instead of just looking at today's miner revenue, we compare it to the last year's averages. And so this helps smooth out the short-term fluctuations, and it gives us a much clearer picture of whether miners' revenue are unusually high or low. And then we divide it, the daily issuance value, by the 365-day average. We get the Puel multiple. And this simple ratio tells us when Bitcoin might be overheating or if it's undervalued. Now, the best part, this indicator has nailed every major Bitcoin cycle top and bottom by showing when miner revenue is too extreme relative to history. The red zone is the market peaks. That's the warning zone. When the Puel multiple enters the red zone, it means miner revenues are at abnormally high levels. Now, historically, this has coincided with Bitcoin's major bull market peaks, because when miners are making record profits, they're usually selling a lot. And this adds a lot of supply to the market, and that often marks the top of the market. The green zone is the generational buying opportunities. So on the flip side, when the Puel method enters the green zone, miner revenues are historically really low. This means that many miners are struggling, some are capitulating, and the market is likely at a bottom. So every time Bitcoin's entered this zone, we saw in 2012, 2015, 2018, 2020, it was an insane buying opportunity before the next bull run started. So what's the Puel method saying right now? Well, right now it's climbing, but we're not yet in the red zone. This means miners are making increasing profits, which is expected in a bull run, but we're not at an extreme overheated levels yet. However, once we see this indicator push into the red, that's a warning sign. It means miner selling pressure could soon outweigh demand, leading to a market cool down or even a cycle top. So how do I use this? Well, just like the other ones, right? We've covered a lot of indicators. The Puel method basically works best in combination with other tools, right? So we've seen the MVRV shows us the value, the profits that investors have, the NUPL. We've seen the Pi cycle top. All of them, if they're flashing warning signs at the same time, then we want to be looking at this cycle as well, or this indicator as well, which is the Puel method, which tells us a different category altogether. Now, the last one I want to show is a little bit less scientific, but still rather accurate, and that is indicator number 5, which is the Bitcoin rainbow chart. It's basically a logarithmic growth curve that helps us visualize Bitcoin's long-term price trajectory and its market cycles. And while it's not based on on-chain data like MVRV, it has historically done an impressive job of identifying when Bitcoin is overheated or undervalued. So here's how the Bitcoin rainbow chart works. Unlike most technical indicators, this chart doesn't use moving averages, doesn't use market sentiment. Instead, it's based on a logarithmic regression model, which smooths out Bitcoin's price history and it projects potential future valuation bands. So every color in the rainbow band represents a different phase of the market, ranging from deep value to outright mania. Blue and green zones, those are strong accumulation periods. When Bitcoin's price is in the blue or the green bands, history shows these are prime accumulation zones. This is when the market sentiment is at its worst, but that's when the smart money comes in. Yellow and orange zones, that's like mid-cycle growth. That's a holding phase. This is where the transition zone happens and Bitcoin starts to gain momentum. And we move into the yellow and the orange bands where long-term holders typically sit tight and they ride the trend. The red zone is maximum bubble territory, and this is where things start getting interesting. When Bitcoin enters the red zone, the chart is essentially screaming, take profits for some. We'll get back to that. Now, historically, every single Bitcoin cycle peak has occurred when we reached or exceeded this band. So is the Bitcoin rainbow chart accurate? Well, let's be real. Like I said, this is a meme chart. It's not based on blockchain activity, miner data, investor psychology, but it's remained remarkably consistent across multiple Bitcoin cycles. And because of that, many investors still watch it. So that being said, Bitcoin's evolving, right? With ETFs, sovereign wealth fund adoption, corporate treasuries now in play, the way Bitcoin moves through cycles could completely change. Now, the rainbow chart might not always work as well as it has in the past, but for now, it remains a simple visual way to gauge where we are in the market cycle. So what is the rainbow chart telling us today? Well, right now, it shows that Bitcoin is sitting in the upper middle bands, which suggests that we're in a strong bull market, but nowhere near full-blown euphoria. So if we do push into the red zone, that's when history suggests that we might be nearing a market peak. But as always, we need to combine this with all the other indicators that we've looked at.
With everything Mark Moss shared, it's safe to say that Bitcoin's market cycles aren't random. Certain indicators have consistently signaled when major movements are coming. The MVRV Z-score and NUPL help gauge whether Bitcoin's value is stretched too far or if it's still in a safe range. Meanwhile, the Pi cycle top and Puel multiple give insight into historic price peaks and how miner behavior impacts the market. Even the Bitcoin rainbow chart, while somewhat visual and simplified, has a decent track record of signaling important market shift. No single metric holds all the answers, but when several start flashing warnings at once, it's a sign that change could be on the horizon. Rather than trying to predict the exact top of the market, Mark Moss focuses on a long-term strategy. He focuses on steady accumulation and strategic adjustments based on the indicators he discussed. Selling too early could mean missing explosive gains, while holding too long can lead to losses. By tracking these signals and adapting his strategy, he positions himself for long-term success. With major institutions absorbing more Bitcoin than ever, this cycle could play out differently from what we've seen before. That's why paying attention to these signals is more important than ever. Which of the key indicators mentioned do you follow most closely, and why? Share your thoughts in the comments. If you enjoyed this discussion, don't forget to like the video, share it with someone who might find it useful, and subscribe for more valuable insights on building true independence through crypto. See you next time. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.